Oh, so sorry about that. Thank you very much, Tyson Brian, for that feedback. I really do appreciate that. So I will have to run over again. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very much excited to welcome you all to yet another promising edition of the Forex Morning Mastery with Sheriff Daramola. And in fact, today promises to be interesting, sincerely, as we're looking forward to some volatility that we want to be on standby to capitalize on when it finally happens. We know that we are looking forward to major events today. We have one from the United States. We have a handful, in fact, from the United States, and a couple of hours ago we had one from the United Kingdom, and that of the United Kingdom came in, and we saw how the market reacted to that event. So we are going to be looking at this together to see how we will be positioning ourselves ahead of today's trading sessions. In fact, in preparation for today's trading session, I have conducted a comprehensive analysis on all of the assets on our watch list for this week, which includes the GBPUSD, XAUUSD, popularly known as the gold spot, and of course the USDJPY, and all of which I was able to identify simple setups using parameters such as trend lines, key levels, and chart patterns to gain valuable insights into the historical price movement, and of course using that information to position ourselves ahead of today's trading session. Now, for those who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as regards to what our plans are today, but we are going to be looking at it and expatiating further on them as we dive into the current market structure. Now, for those who are joining us for the first time, you're highly welcome in bird. And if you don't know, we as technical traders come together on a daily basis in anticipation of both the London and the New York session, where we come here to review our existing position if we have any, and at the same time use the information we can gather on the chart using price action tools to strategically position ourselves ahead of both the London and the New York session. So I'm so excited to welcome you on board and glad to have you around with us. So I encourage you to stay tuned in so you don't miss out on any of these insightful ideas we shall be deliberating on today, and of course be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use this information you gather here to make your own independent trading decisions. So once again, you are highly welcome on board. And in fact, since the last couple of hours today, we begin to see some traction in favor of the US dollar, as everyone is looking forward to the interest rate decision. So in fact, I'm getting a little bit more concerned about the way price is just climbing up on the US dollar, and I'm of the opinion that we might likely be seeing an intentional act to increase the price of the US dollar, where they want to be crashing it later after the Fed rate to make some profit. I don't know yet, it's just a thinking process, but let's look at the current structure to see how the market is playing out, after which we will be using the information we gather there to make our decisions for today. Now, before we go into the details here, you know how we do it. The first thing we want to be doing is to check on the economic calendar. And for those who have been with me for a while now, you know how important this is, as we all know that these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that can make us position ourselves strategically ahead of both prior, during, and even after this event. Now, for today, Wednesday 28th, so we normally focus on high impact event from the economies on our watch list. Now, for today, 28th Wednesday, we have a handful of them from both the United States and the United Kingdom. Now, the first one that came up today was the Consumer Price Index, which of course is an inflationary measure or calculator, let me put it that way, that gives us an insight into the inflation status of an economy. Now, the Consumer Price Index for the annual one for the United Kingdom came in below expectation at 6.7%, which was way below the previous expectation of 7.1%, as you will see here. Now, this has not augured well with market participants in that environment, as we saw this morning how the pounds drop drastically to find monthly lows. Now, we are going to be looking at that and see if we are going to continue selling or we want to be getting ready to buy at that point. Let's hold on. We shall be talking about that in details when we run into that chart. Then the next one on the list here is the Fed's interest rate decision. Okay, so for those who don't know, the Fed rates interest rate decision is the central bank's verdict on whether to raise, lower, or maintain interest rates, which of course impacts the borrowing cost and economic activity. Now, it's always considered as a critical tool for managing and supporting economic stability, but there is a general consensus in the market right now, even prior to today's session, that it is not likely that the Fed is going to be increasing interest rates. But we cannot take away from the table the possibilities that the Fed could also increase interest rates. Of course, we could have surprises, and if they happen, what are we going to be doing? So we are going to be looking forward to that one to see what the actual data will be. And of course, this is going to be coming up much more later in the day. I think this will be about 8 to 9 hours from now. So we want to be on standby to capitalize on any potential opportunity that that event brings. And of course, we all know that the anticipation of this event itself has an influence on the sentiment in the market. Now, we also have the Fed monetary policy statements, the economic projection, the interest rate projection, and finally, we are going to be witnessing the FOMC Press Conference. And of course, this will be a public address by the Fed Reserve Chair following the interest rate decision, and it will be providing us insight into the central bank's economic outlook, policy decisions, and rationale behind these decisions that they will be making today. And of course, this information will be helping to guide market expectations and potential confidence in the market. So these are the high impact events we are looking forward to today. And of course, we all know that the anticipation of this event itself plays a major role in determining how price is going to be playing out prior to the event, during, and even after. And of course, we know that major key players in the market will have gotten an hint of what the data is likely going to be, which would be reflected on the chart as price action. Now, talking about price action, let's dive right into the chart. So the first asset we are going to be taking on today. So I see some couple of comments here. Tyson Brian, thank you very much for your feedback. I really do appreciate them. Umbuso Sierra, good morning to you. Glad to have you around with us. Okay. All right. Okay. I think I saw a previous comment, but I think everything is fine now. Thank you very much, guys, for your feedbacks. So moving on right now, we are going to be starting with the GBPUSD, which, as you will see, we had an impulsive move right after the CPI data that came in below expectation, hereby hitting the market in such a way that price broke down that our significant demand zone identified at the 1.23750 area. Now, I would like us to run through how the week started for us, and let's see what has really been going on in this market and what is likely going to be happening today. Now, if you look at the structure here since the beginning, what's happening here? Okay. Oh, sorry about that. I don't know what happened here. Okay, so let's go back into. So we saw here that price was initially confined between the 1.24040 and that area around the 1.23750 area. Now, if you were with us yesterday, I laid emphasis on the importance of this demand zone, as you will see that since last week Friday, sellers have been struggling around this area. And I told us all yesterday that we are going to look out for buying opportunities if price breaks out of this key level here, situated at the 1.2400 area, which of course happened. And I also mentioned here yesterday that the only condition that will make us want to be selling the GBPUSD is for price to slice through that demand zone, as it has happened this morning, to trigger a sell position. Now, we had the buy position yesterday. Remember, we saw the breakout of both of these lines here, the 1.24040 and of course the 1.2400 area, which happens to be our key level. So we had two positions actually, and in fact I updated us on both my trading view and Telegram platform that we should be moving our stop loss to secure the current buy position yesterday. So we had a total of about, the first one was about 22, the second was about 20, so we had roughly about 40 pips in price movement before the bearish momentum began taking us out of that positions. And of course, if you had moved your stop losses accordingly, you must have been taken out in a worst case scenario break even. Now, as price gradually moved on, we saw the breakdown of the structure right here after the event, which of course personally I missed it. But if you had your sell stop order below that structure, well, kudos to you, as you must have scooped in a significant amount of profit, about 30-40 pips thereabout on that one. And in fact, if you are in a sell position right now, I will be advising you to move your stop losses accordingly to secure this position, as we never can tell what will be happening from this area. Now, with your positions well secured at this point, what is going to be our plans for today? Now, looking at the structure here, remember that on the higher time frame, we acknowledge that price action was finding lower lows and lower highs, and as a result of that, we identified a descending channel. Let's run through that quickly together so that we can see things clearly. So we had a descending channel, which you can see since the month of August. This has been consistent with price actions activity. Now, price is trading right around the support line of that descending channel. And hold on a second, let me extend this line a little further so we can see if price is still respecting it. Now look at the structure closely. This is the support line of that descending channel, and as you will see, price is yet to break down that descending trend line. And every point price comes into that structure, we saw spikes by pressure coming in around that area. Now, will price respect that area, pushing price to the upside? Well, we never can tell, but we cannot ignore the potentials that buyers still have in this market. So we are going to be looking at how to position ourselves for any buying opportunities. And if price wants to continue to the downside, we want to see how we will be capitalizing on that move. And in fact, a breakdown of this support line of this descending channel will be welcoming selling opportunities here. So you do want to be marking out that levels on your chart, as we shall be using it as a reference point to guide our trading decisions for today. Now let's go back into the 1 hour time frame. Now, with the situation we have on the 1 hour time frame, as price has finally broken down that area between the 1.23845 and the 1.23750 area, we all know that from a technical standpoint, when price action breaks down a key structure such as what we have here, there are chances that price could come back, retest that structure, and the inability of buyers to break back above that structure, which of course would reflect on the chart as continued selling pressure on that area, could incite a downtrend continuation. Now you will see how crucial this area is, where it is very important that we remain very, very patient. Now, if price comes into the zone, let me extend it out a little bit so that we can have a point of reference whenever price comes into this area. So if price comes into the zone, we want to wait and see how the market will be reacting to this area. Now, if price gets into the zone and we begin to see that buyers are finding it difficult to climb above and stay above the 1.23845, then we want to start considering selling. So to give a visual representation of what I mean here, a retracement back into this area, and if we begin to see continued selling pressure around this area, like signs of lower highs, lower lows, or reversal patterns around the structure, mind you, this will be observed on the lower time frame, like the 15, 5 or 10 minutes time frame, then we want to be part of a bearish momentum. We want to be joining that. So this is meant for those who had missed out on this bearish impulsive move that broke down the structure. Now, in as much as we're looking out for selling opportunities here, like I said, we cannot ignore the potentials of buyers. Price has remained above that support line of that descending channel since the beginning of the week, which further emphasized the strength of the buyers around this area. Now, if you look at what has happened here in the last couple of hours, especially following that impulsive move, we saw here how the nature of the candles around that area, we saw sharp rejections, giving us signs that sellers are finding it difficult to settle in below this area. Now, because of the situation here, we would not be ignoring the potentials of buyers too. Now, for me to buy the GBPUSD at this point in time, what do we want to be seeing? Now, for us to be buying here, I would like to see, first of all, we have a descending trend line here. We have a descending trend line right here. So I would like to see price break out of that descending trend line for me to start considering buying. And this will be something like this, breakout, then a retest of structure. And remember that a retest here will be lining up with that demand zone we identified at the 1.23750. Now, if price breaks out of the descending trend line, comes back to retest that structure, then the appearance of buy pressure on our lower time frame will be giving us opportunities to buy. So you can see how crucial that temporary demand zone is at the 1.23750, as it's going to be a key determinant of how we are going to be positioning ourselves for today. And if anything interesting comes up or significant happens, of course, I will be with you in the comment section of both my trading view and Telegram platform to give you updates on what we are going to be doing. So at this point in time, let's exercise patience, mark out these levels on our chart so that we can be able to reference them when it's time to. And if you have any questions as regards to my explanation so far, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next asset. So please, let's be very mindful of that 1.2375. It's a very crucial zone. If continued selling pressure resumes around that area, we want to be joining a bearish move. But if price breaks out of that structure and of course that descending trend line, then we will be looking out for buying opportunities. So let's mark these levels out on our chart. And of course, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates. So with that being said here, let's dive right into the next asset on our watch list. So the next instrument on our watch list for today is my favorite, and that is the XAUUSD. And in fact, we begin to see some interesting setup here on this chart, and I'm so excited to share them with you and how we are going to be capitalizing on any potential trading opportunities today. Now, one thing I would also like to state here is that we are looking forward to the interest rate decision, which everyone, majority in the market, are projecting that there will not be any rates today. But for me personally, I'm not going to be taking off the table the possibility that there could be an interest rate. And of course, if we have surprises today, we are likely going to be seeing some volatility in this market. Now, the question now is, at what direction, in what direction will this volatility go? Now, what we want to be doing right now is to sniff through the current market structure to identify structures and patterns that we are going to be using to guide our independent trading decisions. Now, before we begin, I would like to take us through how the week started for us here in this community and what led to the decisions we made so far this week. Remember, we have been buying this asset since the beginning of this week. Now, let's look at what really happened on Monday and what led to the decisions we made. Now, at the beginning of this week, we saw that the price started on a strong bullish momentum. We saw price started around the $1,922.50 level, as you will see here, and we saw a strong impulsive move into the $1,930.50 zone. And immediately price got into the structure, we saw selling pressure resume again, and it was at this point we captured a range where we saw price action confined within. And with this scenario here, we needed to remain very patient to wait for confirmations like breakouts or breakdown of this range to give us an opportunity to trade. Now, what we did here on Monday, especially I think about an hour into the New York session on Monday, and for those who are part of the XAUUSD live window here on this platform, remember we acknowledged a level at the 1927 area where we said because of the fact that price was unable to break this previous low here, as you will see, price was unable to break the previous low, and the fact that price remains above that ascending trend line we identified here on the 1 hour time frame. So this is the ascended trend line we identified on Monday, and we said we will continue to look out for buying opportunities above that structure. So we positioned ourselves just right above the $1,927.50 level to capitalize on that uptrend move. And since that moment, we've been buying this asset, adding more positions at the breakout of key levels such as the $1,930.50 level and of course the 1,934 area to capitalize on that move. And of course, we did move our stop losses accordingly to secure our positions before this sell pressure came in. And one of the things we agreed here yesterday is that if price action does break down that ascending trend line, we shall be getting ready to sell. Now look at what happened here during the later part of the New York session. We saw our price action broke down the ascending trend line here, came back to retest the structure, and if you remember vividly, we said here that a breakdown of the $1,930.50 level will welcome selling opportunities, and this of course triggered a sell position here, as you see. And in fact, price is still struggling to push price further to the downside. And for those who took advantage of the sell position, please, you do want to be moving your stop losses right now to secure this current sell position. And that is exactly what I did too, because we might be seeing bullish momentum coming anytime. It's very, very possible. I don't like sitting on a particular position. We want to be as dynamic as possible so that we can capitalize on any potential move that happens here. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? How do we intend to manage this current position? Now, I shared an update this morning on the XAUUSD, and for those who are with me on both my TradingView and Telegram platform, you will be familiar with what our plans are. But for those who are not, let's look at this together. So this is how we have been monitoring the XAUUSD since the beginning of the we have been buying. We are on the positive side of our portfolio on the XAUUSD until we begin to see a little bit of a twist in the market in the early hours of today. Now, my commentary here says that after exiting our buy positions with a modest profit, we've noticed price actions undergoing a shift towards a lower high structure. The US dollar seems to be strengthening, and the prevailing low volatility and the customary pre-FOMC quietness midweek. Dollar support persists courtesy of the robust state of the US economy. Of course, we saw the data last week. Chart-wise, we are witnessing the emergence of a potential reversal pattern. I will be showing you that in a moment. In light of this development, it's advisable to secure all sell position while also keeping in mind that the bearish scenario isn't set in stone. Buyers still retain some potential in this market, so we'll remain vigilant for further trading opportunities. So now, from the wordings I have here, it is quite clear that we are at a crucial moment in this market. Now, since last week, price has been impulsive to the upside, as you will see here, and with the fact that price remain finding higher highs and higher lows here makes us not to ignore the potentials of buyers. However, if you look at the structure here in the last 24, 36, 48 hours now, you will see that price appeared to be gradually transitioning into a reversal pattern in the form of a head and shoulder pattern. Now, that in conjunction with the breakdown of the ascending trend line is a sign for me that we might likely be seeing some reversal move. Now, to give a visual representation of what I mean here, look at this impulsive move all the way into the 1,934. We saw price drop into the structure. We saw the head of the reversal pattern right here. Hold on a second, so we saw the head of the head and shoulder pattern. Price came back into the structure, and we saw the right shoulder. Price came back again, as you will see here. And look at what we have here. We have a pattern that looks more like a head and shoulder pattern. And from a technical standpoint, whenever we identify such, the next thing we want to be doing is to mark out the neckline, which will be validating that reversal pattern. And if you look closely here, we have this $1,930.50 level duly marked out here, which lines up with a potential neckline. And of course, we need the breakdown retest of that line to validate this reversal pattern, which of course has happened. Now, will price action continues to the downside? Well, I have a trend line that we are going to be using to guide our trading decisions for today. And as a result of the lower highs we observe here since the later part of the New York session, we have a beautiful descending trend line that we shall be using to guide our decisions for today. Now, what this simply means is that as long as price remains below that descending trend line, we shall continue to look out for patterns and structures that supports the idea of selling these assets. And the only condition that will make us want to be buying the XAUUSD today is for price to break out of that descending trend line, retest that structure, then we can join an uptrend move. But as it is right now, it's still looking very bearish. Price remains below the descending trend line, hence we will continue to look out for more selling opportunities. Now, we have multiple levels here, like the $1,927.50 level, where we shall be looking out for more opportunities to maximize the potential of this bearish move. We also have the $1,925 and of course the $1,922.57 level, all of which, if price breaks down the structure, we shall be looking forward to adding more positions to our existing trade. Now, in as much as we're looking out for selling opportunities here, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. And considering the fact that price still remains very bullish in this market since last week, a breakout of that descending trend line will definitely be welcoming a potential momentum shift at this point in time. So we might likely see something like a breakout of both the descending trend line and the $1,930.57 level, where it shares a beautiful confluence to look out for buying opportunities. So if we have a breakout, scale down to the lower time frame, look out for retest of structure, then we can join the uptrend scenario. And in fact, we had multiple levels here, like the 1,934 and the $1,936.70 area to maximize the potential of the uptrend scenario. Now you can see how crucial the current structure is for us, as where price is right now is a crucial moment. We need to exercise patience and let's see how the market will react to the structure. So the most important parameter on this current structure here is the descending trend line and the level, this neckline here at the $1,930.50 level. Now, depending on how price reacts to the zone, will determine where price will be heading to today. So let's see how the market will play out. And for those who don't know, you can be part of our XAUUSD live window later today. It starts about 5 to 10 minutes into the New York session, so that you can be part of the live monitoring of this asset. So these are my views here on the XAUUSD for today. So let's mark out these levels on our chart, as we shall be needing them as a reference point to guide our independent trading decisions for today. So I don't know if you have any question. If you do, please let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions before we move right in to the next financial asset. So I see a comment here from Tyson Brian. What brings about this gap forming when the market opens, and does it have any effect to the price action? What brings about this gap forming when the market opens, and does it have any effect on price action? Well, if I understand what you mean correctly, you're talking about when the market opens at the beginning of the week, we see a gap. Yes, of course. There are trading activities that occur during the weekend, which of course are by institutions like the central banks, the hedge funds, and the likes. So whenever they do have trading activity during the course of the weekend, we are not in the know of what is going on then. So in the beginning of the week, when the week opens, we see a gap. So if the gap goes up, it shows that there was a lot of buying during the course of the weekend. And if the gap shows that it goes down, then it shows that there's a lot of selling during the course of the weekend. And of course, it could give us some insight into what the big players in the market are thinking about that market at that particular point in time. So of course, it does have an effect in the market in terms of the psychological, sentimental aspect of the market. So I don't know if I answered your question correctly. If I didn't, please let me know in the comment section. I will of course rephrase myself to make myself more clearer. All right, so in the absence of no further questions, I want to assume that we are all on the same page here. So we shall be moving right into the next asset on our watch list, which of course is going to be the last instrument we are going to be looking at today. So the next asset we are going to be looking at today is the USDJPY, and in fact, what an interesting scenario we have here, as price action just moved exactly as we projected during the early hours of this week. And of course, for those who had watched my video on the USDJPY, price just really moved just as expected. So to refresh our memories on what has really been going on in this market, let's go into the higher time frame. So let me quickly share with you what we saw at the beginning of the week. And in fact, if you are not watched my video on the USDJPY, please do go and watch them, as you will get to understand what is really going on in this market and how we are able to identify the levels and structures you are seeing on the chart right now. Now, at the beginning of the week, we acknowledged how the 147.950 is going to be serving as our key level for this week. And one of the things we agreed here is that if price breaks out of our key level, we want to be looking out for buying opportunities, of course. Then, in addition to the key level alone, is the fact that we identified an uptrend continuation pattern. Now, it came in the form of an ascending triangle. Now, if you look at the structure closely, we saw the impulsive move that brought price into the structure, and we saw an horizontal resistance line, as you saw here. Since the beginning of the week, price was unable to break out of that structure. Then we have the higher lows identifying, giving us a beautiful ascending triangle. And of course, whenever we sight ascending triangles on our chart, it's a very good signal that price is going to the upside. So normally we position ourselves right above the resistance line to capitalize on that uptrend continuation. And of course, you saw here that since the beginning of this month, buyers had continued to knock in on that ceiling, and as at every point in time, sellers have been negating the attempt. But one thing for sure is that as pressure continues to eat on that ceiling, at some point it's going to cave in, welcoming buying opportunities, as you will see what happened during the Asian session today. So you can see with the scenario we have here, it's likely that price will continue to the upside. Now, besides this setup we identify from an holistic standpoint, remember we also went further to scale down to the 1 hour time frame to see how participants in the market is reacting to that ascending trend line. And of course, when price remains above our ascending trend line, we continue to look out for buying opportunities as long as price still remains above that structure. And the only condition we agreed here on Monday was that we are only going to be selling the USDJPY unless we sight a breakdown retest of this ascending trend line, which of course is yet to happen, hereby increasing the chances of looking out for buying opportunities in this market. Now, how did we position ourselves for this bullish move? Now, on the 1 hour time frame, we were able to identify some levels after monitoring how participants were relating to that structure at the beginning of the week. Now, one of the things we observed here was that price was initially caught within a range that was within the 147.890 and the 147.720. Now, during our live session yesterday, we acknowledged the presence of buy pressure within this channel. Now, we saw what happened here since Monday between the 147.720 and the 147.600. You will see how as soon as price got into that area, sellers have always struggled to break down that zone. And for us, this lasted about 48 hours, and this is a good signal that sellers are not having that momentum or steam to break down the structure, hereby emphasizing the strength of the buyers in this market. And one other thing that made this whole structure intriguing was the fact that price was sitting above that ascending trend line. So you can see how everything was lining up for buying opportunities in this market. So what we did here yesterday is that we said that we are going to be capitalizing on buying opportunities if price breaks out of the 147.720. And as you can see what happened here, price broke out, and I told us all yesterday that we should ensure that we have enough room for price action to breach. So I was telling you to have between 15 to 20 pips stop loss on this position. Personally, I had about 16 pips stop loss on this one. The price dropped down, back up, dropped down. We were still within that stop loss zone here before we saw what happened during the Asian session today. And remember that we identify multiple levels like the 147.890, and of course our key level had the 147.950. Remember, this is the resistance line of that ascending triangle we identified on the daily, on the higher time frame, where we said we will be looking out for more buying opportunities in this market. Now, for those who are taking advantage of this opportunity, well done to you for being on standby to capitalize on this move, as you will currently be running with a minimum of 3 positions in profit at this point in time. Now, you know how we do it whenever price action moves significantly well in our favor. The next thing we want to be doing is to move our stop losses and secure our current buy position. And of course, while we're trying to secure our positions, remember that we want to be given enough room for price action to breach, so that if any volatility comes in along the line, we can still be within the range to be part of the uptrend continuation. So at this point in time, based on this current structure, I will be suggesting that anywhere around the third entry, that is the breakout of the 147.950 and the 147.890, seems most appropriate to secure this buy position. And of course, if you notice how that zone is, it falls right below that ascending trend line. And you know how we do it. As long as price remains above that ascending trend line, we shall feel comfortable in our buy positions, while we also look out for more buying opportunities. Now, with a well-secured buy position at this juncture, what is going to be our next line of actions for today? How do we intend to manage this position? Are we going to continue buying this asset, or are there chances that sellers could come in? Now, I would like to run through my commentary on the USDJPY this morning. For those who are with me on both my TradingView and Telegram platform, you definitely have gotten this update on how we are going to be managing our positions on the USDJPY. So let's run through this quickly. So I said here this morning that during the Asian session, the USDJPY surged to its highest in over a week, marking a significant breakout above our identified key level at the 147.950. This level corresponds to the upper resistance boundary of the ascending triangle we've pinpointed on the higher time frame. I think we talked about that a moment ago. The breakout sets a bullish tone, suggesting a potential continuation of the uptrend. With a technical setup clearly favoring bullish traders, the outlook supports the possibility of an extension of the recent upward move. So it's advisable to secure all existing buy position as we remain vigilant for additional trading opportunities in this market. So let's go right back into the live chat and see what we said here. So with a well-secured position at this juncture, what is going to be our plans? Now that price action has finally broken out of that resistance line of that ascending triangle we identified on the higher time frame, then at this point I want to feel comfortable in this buy position. Now, for those who had missed out on this opportunity, let's look at if the market will be giving us a second chance to be part of the uptrend scenario. Now, from a technical standpoint, whenever we cite a breakout of a key structure such as this resistance line here, we expect that some point in time price is likely going to come back, retest that structure in anticipation of the uptrend continuation. And in fact, if price comes back to retest that structure, it will still fall in line with that ascending trend line we identified earlier. So for those who missed out on these opportunities, let's see if the market will come back and retest the 147.950. And if it does, we want to scale down to our lower time frame to look out for signs that sellers are finding it difficult to break through that ascending trend line. Remember, if this ascending trend line is broken, this could incite some momentum shift, but as long as price remains above the ascending trend line, we feel comfortable in our buy position. So that is one way we can capitalize on this uptrend scenario. Now, the second one is this. It's not all the time market comes back to retest structure, and instead, after the breakout, it continues to find higher highs and higher lows. And if you're not careful, if you miss out on that one, you might not be able to join it anytime soon. Now, in this case scenario, the next point I want to be looking at is this. This is the next highest point price action has been for this week. So we do want to be marking that level out. Now we can see we have the 148.160, So we do want to be marking out this level on our chart right now, as we are going to be using it to guide our uptrend continuation here. So we have the 148.160 level. Let's duly mark this out on our chart, and then let's see how the market is going to react to the structure. Now, in the last 1 hour, we've noticed selling pressure around this area, as you'll see here. So what we are going to be looking out for is a breakout of the structure to allow us to add more positions to our existing trade. And if you are new with us, then this will be a good opportunity to join. Now, there is a caveat to the setup here. There is a way to which we take advantage of these opportunities like this in this community. Now, the first thing here, the first one is for those who are already profitable on the USDJPY. That is, if you had been part of this profitable journey since the beginning of the week, then you are profitable, and then you can afford to leverage on the profit you have made so far this week to test waters above the 148.160 and to capitalize on that move. And if it doesn't work out, then we know that if we get stopped out in a loss on that one, we are still taken out of the profit we had made so far this week, so we are not really affected at all. However, if you are new with us and you are coming in from a clean slate on the USDJPY, then I will be suggesting that you exercise patience as soon as the breakout of that structure happens, waiting for a confirmation before jumping into that positions. So to give a visual representation of what I mean, what I'm trying to say here is a breakout, first of all, for new traders who don't have a position yet on this one, a retest of structure in the lower time frame could incite buying opportunity. So you do want to be part of that move at the retest of that structure. Now, I would like to tell you that it's very likely that we could have a trend continuation pattern here. It could transition into a flag pattern, triangle, falling wedge, or pennant, whichever case it may be, before the breakout of that structure happens. So let's be on standby to capitalize on that move. And also don't forget the potential of price dropping back into the structure, retest it to incite the uptrend. So on the USDJPY for today, we still hold on to a bullish bias as we get prepared for the Fed interest rate decision coming up later in the day. And the only condition that will make us want to be selling the USDJPY today is for price to break down that ascending trend line. Now remember, this ascending trend line has been supporting this bullish momentum since the beginning of this month. And if price will break down that trend line, it will be a sign that we might likely be seeing a momentum shift, and that the breakout of the 147.950 could turn out to be a false breakout. So let's keep that in mind as well. So if price drops and break down the ascending trend line, retest of structure should be confirming a sell-off in this market. But I doubt that will happen. But if it does happen, we want to be on standby to capitalize on that move. So these are my views here on the USDJPY for today. So our center of focus on this asset is between these price levels at the 148.160 and our key level at the 147.950. So depending on how price action reacts to the zone today is likely going to be giving us a sense of direction in this market. So you do want to be marking out this level and use them as a reference point to guide our independent trading decisions. And don't forget that ascending trend line is a very good parameter in this current market structure. So if you have any questions regarding what I just explained so far on the USDJPY, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today. And you can as well use that time to mark out those levels on your chart. All right, so I see your comment here, Mbuso Sierra. All right, well done to you. You're asking that what will be your advice on a trader who wants to reduce their trading assets to gold GBP, JPY, I guess that's what you mean there. US 30 only and focus on these three pairs. Well, there's nothing bad in doing that. In fact, it makes you more focused. The lesser the instruments you monitor every week, the better focus you are, and the higher the chances that you follow through with your plans. So I think it's a good idea, and of course, the lower the frequency of your trade, the lower the compulsiveness you will be experiencing when you are taking your trade. So I think it's a very good idea, and personally, I ensure that I reduce the instruments I monitor every week to the BRS minimum as possible. So it's a very good idea, Mbuso Sierra. I do hope I answered your question correctly, and you're welcome, Tyson Brian. I saw your comment just a moment ago. All right, so in the absence of no questions, I want to assume that we are on the same page here. And in fact, I'm very confident that we are well prepared in anticipation of both the London and the New York session today. We were able to attend to three major assets today. We talked about the GBPUSD, the XAUUSD, popularly known as the gold spot, and of course, the USDJPY, where we were able to identify simple setups that we are going to be using to position ourselves ahead of any potential move during the New York session, and in fact proud to the interest rate decisions and after these decisions too as well. But trust me, I will always be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. If you have found this content helpful and useful in making your independent trading decisions for today, I will really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. Thank you in advance for doing so. And for the XAUUSD live window, the link is already out. I can't find it right now, but I will suggest that you scan through my page. You will find the link to the XAUUSD live window. This window starts 5 to 10 minutes into the New York session, so it's basically focused on real-time price action on the XAUUSD asset. So you do want to be part of that session. Click on the link, click on the notify me button so that you can get notified as soon as we come online. So let's get prepared for the interest rate decision today, and let's see how much we can capitalize from the market today. So for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, I welcome you newcomers, and I look forward to seeing more of you tomorrow. Same time, 8:05 a.m. UTC, 9:05 a.m. West African time, as we come here again to review how well this asset has been doing, and at the same time prepare ourselves for tomorrow's trading session. I look forward to seeing you all in the comment section of both my TradingView, Telegram platform, and of course during the XAUUSD live window, which is coming up later in the day. Do have a wonderful evening, everyone. Bye-bye.